every day you're knocking in another gain, you're making a lot more progress than you realize. You don't have to overcomplicate big ideas like this. The volume is your friend in almost every trade. The way I would go back and review my trades is something that I call mistake tracking.
Hello, and welcome to The Trader's Journey by Investors Underground. In this episode, I'll speak with a successful young trader who turned $30,000 into well over $900,000 in just 2.5 years. He's written extensively online about his trading journey, sharing everything from risk management to drawdowns and the inevitable ups and downs of finding consistency and profitability. It's my pleasure to introduce Kyce. Hello, Kyce. Thanks for being here. Welcome to the show.
Thanks for having me here. Appreciate it.
Kyce, for those who might not know much about you, I wanted to start by just asking, can you tell the audience a little bit about yourself and how you discovered the stock market and trading?
Yeah, sure. So I discovered trading when I was 18, and at the time I was big into competitive Fortnite, actually. That was the hustle I was trying to make it at. And one of my buddies, who was a few years older than me, who I was playing with, formed a private Discord group, and he was like, "Hey man, you want to join? We're gonna start getting into stocks." And it's like, "Sure." So I joined that, and they were all on Robinhood, and this was like halfway through 2020, so right when the bubble was starting, and they were doing options plays, like Clorox earnings plays because COVID had hit, so going on the cleaning supply stuff. We were all on Wall Street bets, chasing different pumps, and we did the Apple split that summer, and some other plays like the Palantir IPO later in the fall. So that was kind of like my introduction into the market, which is probably typical for a lot of people that joined at that time. A lot of pumps and just chasing the momentum. But from that moment, I was hooked. And as for my background, I'm just a pretty normal dude, nothing too special, but I've got three brothers, and we all grew up playing competitive soccer together, and my parents treated us like adults, honestly, from a really young age. So they expected us to make all A's, and as long as we did that, they basically let us have total freedom with our time, and I really appreciated that because it kind of helped me grow up a little faster, especially two of my brothers were older brothers, so I had a lot of their friends and just influence from older people. And I tried a few businesses in junior high and high school, an eBay reselling business, and then in high school I did a drop shipping store, which didn't work out too well, and then I also had like a math tutoring business, which also didn't end up working out too well. Thankfully, it led me into trading, but the businesses did make me a little bit of money, and most importantly, they kind of gave me a taste of failure, and every time I messed up, I was left wanting to find something that really worked. So thankfully, when trading rolled around and I saw a little glimmer of hope there, I was all in on it because I knew what it felt like to be failing at something. So I guess that's a little bit about my background.
I mean, you started at a very interesting time in the markets to be trading. Do you
Right.
attribute some of the, competitiveness and your endeavors in business as some things that helped you excel in trading, or do you think you would just happen to find the right field at the right time?
You know, Getting lucky, kind of joining at the right time. It was hard not to lose if you were taking profits because most things were going up when you'd get in them, they would go up. So as long as you locked it in and didn't hold it back, you could win. But definitely that my background influenced me, because the market, you're competing with other people for liquidity and gains. So that to me is like the highest skill gap game there is out there. So absolutely that influenced me to be super into the market and just poured all my time into reading and researching and finding new plays. So yeah.
You had a built-in sort of trading network when you started. Do you still keep in touch with that group? Are they still trading as well?
Yeah, actually I do keep up with a couple of those guys still who are still trading. Some of them have jobs outside of trading, which they've kept and do well that way, but a couple of them trade pretty often and continuously. So I do still talk to them, which is crazy because I've known some of those guys on the internet now for 5, 6, 7 years, and the influence they had on me to get into trading has like completely changed my life. So it's really interesting. But yeah, they're great dudes.
During that time, what resources did you use to learn how to trade in addition to that network? Were you reading books, watching videos online, or anything like that?
Honestly, it was mostly online. I did read a few books. I got into the Mark Minervini series, which is really good, like foundational stuff for, how he swing trades and like breakouts and stop losses, mindset. And that stuff's all applicable to honestly any type of trading. But other than those books, I really got into like Reddit and Twitter pretty heavily, which I'm thankful about because I think Twitter X is probably the best platform to get exposure to different like real traders that you may not see as much on like YouTube or other social media where you'll run into like a lot more course sellers and stuff like that. But Reddit really heavily with Wall Street Bets, and then the day trading subreddit on there. And other than that, it was just chatting with my friends and picking their brains.
If you weren't going to be trading, if you didn't happen to find trading in 2020, what was the plan?
At the time, I was enrolled into college, and I did end up going to college for a year and a half. So that first year I was trading, and like halfway through 2020 into 2021, I was doing online school simultaneously because with COVID, everything was online. So then, halfway through 2021, school went back to in person, and at this time, I was really getting into trading heavily. But I did end up going to school on campus first semester, and that ended up not working out too well because obviously I was pouring all my time into trading, and I was going to school for engineering, and some of those classes are only offered in 1 or 2 segments in a semester, so I couldn't choose evening or early morning classes, and that conflicted with trading. And the feeling of being in class, like not being able to participate in a trade or an idea I'd been watching, didn't sit well with me. So at the end of 2021, start of 2022, which is when I went full time, I just decided to drop out and put it all into trading.
What was that moment like when you realized, hey, I might be able to actually make a career out of this? Do you remember that moment or the time frame when you started to think about that?
Yeah, definitely. It definitely came around that time when I dropped out. It probably came a few months afterwards because when I dropped out, I was not consistently profitable yet. I had made some gains, like I mentioned, chasing those high momentum plays, but the real trading started once I dropped out and I was putting like 10 hours, 12 hours a day into it. And I'd say by like March or April of 2022, when I'd strung together my first few green months, even though they were like 1 or 2K, I was like, whoa, this is actually possible to, do. And I was seeing people trading similar stuff, pulling in a lot more numbers than I was, and I knew that if I stuck with the process, I could get there. So probably April 2022, around then was in the moment I was like, this could be something for real.
If you're looking for ways to improve your trading, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. Members have access to the morning broadcasts where the IU moderators share their trade ideas for the day ahead during the pre-market session. Members have access to the midday study sessions with Stan, the midweek study sessions with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of the Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to our episode with Kyce. What were some of the early lessons that you learned at the start of your trading journey?
Keeping the size small when I first started was huge because my emotions were definitely hot, like early on, and I knew the money was going to matter quickly, like within 6, 12 months, not being in school. I needed to have profits to show for it, but thankfully I didn't let that influence me at the very beginning because I knew the process was more important. So I stuck to that really small size, was only pulling in 1 to 2K a month, and that let me build my process correctly without having any major drawdowns or any like major meltdown moments. And then the studying, the journaling, that was probably the most important thing because up until the start of 2022, I was very receptive to trading information, but I hadn't actually gotten a trading journal and recorded every trade and gone back through the stats and broken down everything. And once I started doing that, I noticed my profitability started to really take off. So once I started journaling, that was probably the most important thing because that consistent every day looking back at every trade, that took me from being like a semi-intelligent trader who could catch on to trends to like extracting real edge every day. And that's because I was, doing that review.
That's really interesting that the journaling and the data tracking was really what helped you out to take that leap. Was
Right.
it just journaling, or was it journaling with charts and images? What exactly were you doing for those listening who might not be doing that or might be thinking about doing that and maybe want to integrate that and really get better at that area of their trading?
Yeah, so specifically what I was doing with the journaling was a little unique, and I'll talk about that a little bit. Essentially, I know that I got consistently profitable when I started at the beginning of 2022 full time pretty quickly, and I believe the reason for that was the way I would go back and review my trades is something that I call mistake tracking. And it's basically just the method that I use to help build my edge in it as fast as possible. And I would review my trades every month or every couple of weeks, and I would focus only on the losing trades first instead of my winning trades. And I think most people focus on their winning trades and then they look at um, like what to repeat specifically, like what are the key signs here and where can I go find those in the next trade. And for me, I almost didn't focus on that at all. I just focused on like how can I cut out my losers from each month. So for example, in February of 2022, so this was 2 months in, I had a gross gain of $6,000 on the month, and I only netted a 2K profit. So I would go back in my review and look at that $4,000 gross loss, and I would establish rules, sometimes completely arbitrary rules that were not related to the trade, but would help me eliminate that losing trade. So I had rules like no trading under VWAP because I had two big losers in February from trades that were under VWAP. And they may not have lost because they were under VWAP. It could have been something else. But I knew for March, if I didn't trade under VWAP, I would not repeat those two big losers. And in my mind, I'd be like, okay, then my net gain would improve going into March. So I had rules like that, and then I had rules like no trading first 15 minutes off the open, because I used to get caught up in the volatility. It's a little sporadic off the open, and that would cut out a different loser. And then no trading certain stocks with volume criteria that's too low. And I would get really specific every single month. So January, February, March, April. And by the time like May, June, summer rolled around, I had like 10 or 15 different things that I stuck to every day. And I knew them by heart that I couldn't trade here, I couldn't trade there. And what happened is my profit factor, which is your gross gain to your gross loss, which was just barely over one when I started, so like just barely making a profit, 1 or 2K months. It started to climb up into the high ones and then into the two level. So I knew that my ratio of winning to losing was improving with those rules that I was creating. And I continued that for the whole year of 2022. And by the end of the year, my profit factor had moved up to 3, so that I was taking 3 times as many winners or amount of winners as losses. And I attribute that to the mistake tracking because the amount of losers I was taking every month was dwindling in size and amount, and that helped me find my edge. Honestly, I think a lot of people out there who might be right on that break even or slightly profitable area, they probably do have a true edge in the markets. They just don't realize it. Um, if they found ways to just cut out some of those losers while maintaining what they're doing, like some of those losers that could easily be eliminated, they might actually start to see that, whoa, I can make a profit doing this. And then it can snowball from there as you build confidence and, continue that. But That was the study method that I went with.
That's incredible. And I think you bring up a good point about understanding your losses and trying to really cap those losses and find
Yeah,
ways so that you're not bleeding out your winning trades. Like you
right,
mentioned, especially for those break even traders who really could teeter on being consistently profitable, but maybe it's one big trade or two big trades a month that are
right.
really setting them back. I think that's really helpful. So I wanted to ask a little bit about your trading style now. I wonder whether it's changed over the years. How do you find edge in the markets today, and how would you even describe your trading style and where you extract edge from the market?
I'm long only in small cap, so 99% of my career P&L is long only. Um, and my daily driver is scalping, so looking at 5 to 30-minute scalps, sometimes shorter than that. And recently, into this year, 2024, I've started adding just discretionary swings on the side. And that kind of comes back from my roots where I was learning in 2021 chasing momentum plays. I sometimes have those ideas when I'm witnessing the markets, but now that I'm consistently pulling an income from scalping, I put that into like a momentum trade in the market. And honestly, my trading in terms of long small cap scalping hasn't changed too much since I started. I've stuck to mostly what I've been good at, and it's evolved slightly over time because the markets do shift. But things like I was mentioning with my study style, I used to never trade pennies in 2022 because I found I was unprofitable in those in like the first few months. So I cut those out, and that was one of my rules to like stay profitable. But in 2023, once I had a good year, I was like, okay, I can add these back like slowly so I can start trying to make more. And I did add that. So now I also trade pennies. And then I also trade stocks over $10, which I didn't used to. And a lot of those rules I was talking about that I added from my studying, I've kind of let those slip away as I've gained more experience of the nuances of small caps. And that's probably how my scalping's evolved over time. And then, other than that, I try to stick to what I'm good at for now.
Yeah, that's interesting. You're long only, and that works for you.
Yeah,
You know that it works for you, and you're finding ways to just focus on that, do what you do well, and then slowly, as you mentioned, filter in new potential plays and ways to make money in the
definitely.
markets. Have you found much success in 2024 in ways that you haven't found it in the past? In other words, is there anything you're doing in 2024 that's any different from what you've done in the past, or are you just focused on what you do best and keep doing that?
Oh man, I honestly, it's just the swings that I'm focusing a lot on. I've got the scalping, down, I'd say, where I can comfortably do that with a lot less time put studying into it. So my thought process moving forward is continue to do that and then um, invest heavily on the swings, which could be, a lot bigger return. But really, I'm the same trader mostly as I was a couple years ago, and I don't plan on changing that too drastically anytime soon until I've maybe built up a bigger portfolio.
Is there one trade recently in 2024 that you think exemplifies your trading style that you're willing to talk about with us?
Sure, yeah. In fact, I'll just share my screen for it real quick. Yeah, so this was the GameStop trade that I had. This was my PR trade of my career and this year, back in June, kind of when Roaring Kitty came back and hyped the stock up. And you can see that big gap up right in this area that came off that Roaring Kitty news. And so at the time I was scalping, like I said, I scalp every day. But then this gap up kind of caught my eye because I know GameStop has a big history of running. And the reason that I started longing it down here, the thing that I noticed was the volume down at the lows, which is where the stock retreated to, was a little bit higher than I had anticipated. Because what I noticed in this day, a lot more churn of that liquidity than I would have anticipated. So that kind of flipped my bias, and that's why I took some long. And honestly, I didn't expect this trade to work as quickly as it did. I remember when I originally took this trade, I was anticipating at least a week or two, but so I got lucky with that timing. But anyways, I longed some here, and then as the trade started to work, I pyramided some more, and I just expected, a new high, and once it started making a new high, I was trailing it, and I got really lucky with the sells, obviously, but we had this parabolic run on this day, and I think some people remember this parabolic over 40, gave a big short down into like the high 30s, and then I noticed again that one of the candles off of that parabolic short got soaked up really hard on heavy volume, and then it started trading sideways. And I was like, whoa, whoever bought this up originally is probably still on this because nobody should be buying up that candle so hard after such a big top. And I ended up relonging it, and I sold a good portion, probably about half, into after hours. That's where these sells are up in the 60s. And I swung the rest overnight because, of course, I wanted to gamble some of my remaining shares for, a move to 100 or something. And they dropped a second offering on us. So that's where these sells are here. But in terms of the overall thesis for this momentum play, it came from, just the volume, which you don't have to overcomplicate big ideas like this. The volume is your friend in almost every trade. The volume's telling you how interested people still are, because if something's turning volume, there's somebody in there. Usually when stocks are fading off slowly, they're doing it on really low volume. But that's an example of a momentum trade that I've added this year now that I'm really comfortable with my scalping.
Thank you so much. That's an incredible trade. One question I have is, how are you so disciplined to not touch it in the 40s originally and to wait for it to come back to the 20s? I'm assuming a lot of people out there were really, really, really excited about this and probably bought it in that initial jump up above
Right,
40. You did something great there, which is give yourself a good risk to reward in hindsight. But in the
right,
moment,
right.
what are you thinking when you see it go from the low 20s to 40s? Are you automatically thinking, well, if this pulls back, maybe you'll take a trade? What are you thinking there?
Honestly, the reason I waited is because once it gapped up, I had just admitted that I missed the trade at that point because it came from a Roaring Kitty tweet over the weekend and it gapped up in Robinhood overnight trading and then into the morning. And I guess the beauty of trading, which we all know, is you don't have to take a trade if you don't like it. So the reason I didn't chase it up there is I didn't feel like I was getting a good entry price, early before other people up there. Um, so I could have scalped it or maybe taken a short on it, but at that place I was just like, yeah, I missed it, whatever, and I went on to my scalping and not even worrying about it. It was only after the offering and once I saw it pulled back a lot and then I saw that volume that I thought, okay, there might be an edge here for me. So really it just comes down to patience like any other trading. You just have to be okay with missing some trades. And I've missed tons of trades this year. I spent the beginning of the year missing like SMCI, Big Short. I totally fumbled that, and I just had to like sit and watch as, I missed the trade. So once you're comfortable missing trades, it becomes a lot easier to maybe pick your winning trades because you're waiting for something that really speaks to you. So I guess that's why I waited.
That's incredible. And you gave yourself a really good risk to reward here. So you see it basing at 26. What are you thinking in terms of a potential stop out if it goes back down? Is there a price that you had in mind where you would cut it for a loss?
Yeah, so this definitely off of the range this had on this gap up, up to the high 40s back to 20s. I knew that my potential reward was going to be big, 10, 15, 20 plus dollars. Plus it's Gamestop, so there's always that chance that it does something absolutely crazy. So knowing my reward could be huge, I was okay risking a few dollars on this. And you can see my entries down right in the 26 area. I just risked this prior gap up, so down in the 23 area, because to me, if it wasn't able to hold over the initial spot that it made a move from, then it was no longer bullish. Like if it couldn't maintain that level. And obviously, like I said, I got really lucky on the entries. I bought the bottom and then it started working immediately. But, I did buy it for a real reason off that volume and my risk was appropriately placed. So, a few dollars risk and then I got lucky with the huge payout.
Absolutely. Congratulations. That's an incredible trade. And thank you for sharing that with us.
Yeah, man. Thank you. Thank you.
One other topic I wanted to talk about was routine, whether that's a pre market routine or a routine that you go through after hours. Do you have a routine? And if so, can you talk about what that entails?
Yeah, sure. Um, Honestly, my routine is really simple. Being long only, most of my opportunity comes during the day when the volume is centered. Whereas the shorts, I think it can be a lot of pre-market, a lot of late day fades. For me, if you're looking at liquidity in small caps, it's the first few hours for most longs. So my routine, it sounds kind of lazy, but I usually wake up right before market open, check my scanners, and then, I let the dust settle off the open, and then I'm picking out where I see volume, and it's that simple for me to just find the volume. And sometimes the volume isn't on a good stock, so I'm not placing a trade, and I still have a few days like that a month where I shouldn't trade. That doesn't mean I don't trade, but days I know I shouldn't. And then outside of the market, you know, the first year, 2022, I studied every single day, and I was super disciplined on that. But now that I've kind of got it down a little bit, I just study here and there when I can feel myself slipping or I want to find something new. And then, I mean, outside of stocks, like working out, making sure to stay active, that's all routine stuff, but not necessarily directly stock related.
What helps you the most these days get your information? In other words, are there any tools or resources that you basically couldn't live without in your trading?
Definitely trade ideas. I'm sure that's a common answer. The scanner, you everyone can curate that for exactly where they know their edge is. So that's a huge tool for people that don't have consistent stock selection. You need something like that. Thinkorswim has free scanners that I know a lot of people used early on. I did too. So if you can't afford trade ideas at the start, that's another good one. Um, Other than that, Discord obviously. Um, I'm not in any big chat rooms or anything like that. I just trade, on my own. But um, Twitter, I guess, I definitely surf X and Twitter more for my momentum trading ideas. And there's a lot of good stuff on there actually, like real edge being discussed. I remember in the SMCI run up, the only reason I found that trade is everybody was talking about it on that day three gap up where like everybody was shorting it. And so I watched for that trade simply because of X. So you can use X as a tool big time if you filter out the nonsense and you just focus on who's talking about what and then seeing if it fits your own criteria. There's actually a lot of edge to be had out there.
Thank you. I think that's an incredible answer, sort of like a social arbitrage of what's being discussed and seeing
Yeah,
if there's
definitely.
edge there. And I know you talked earlier about mistake tracking. I'm wondering if that's something that you still go through in your trades and your reviews, these days.
Yeah, it is. It's not, I wouldn't say it's every month rigid or every 2 weeks rigid like it used to be, but I will absolutely go through um, and go back and do that because sometimes I'll know throughout a month if I'm trading um, decent or not. And when I know I might be slipping up a little bit, I'll come to the end of that month and I'll go back and I'll review. And then usually I'll find a tilt trade or two or a trade I shouldn't have been in. And when that happens, I will go back and I'll do some review on that and I'll memorize, I'll visualize those mistakes. I'll literally make myself memorize what the chart looked like. So next time I'm in that scenario, it's fresh in my brain. And um, yeah, so I'd say probably every 2 to 3 months I'll go back, and it'll be like 10 or 15 of my worst trades for the past 3 months. And as long as they weren't good trades that failed, they were actually a tilt or a bad spot, I'll definitely go back and make myself memorize those, and then I don't repeat them for at least a little while.
And one of the things that I noticed about you is that you are an excellent writer. You have some really cool
Oh,
write
thanks.
ups. And I'm wondering if that is part of your routine now. Do you still do quite a bit of writing? What does that all look like? Has that been helpful for you in the past, putting things together? And do you review some of your older writings?
Yeah, absolutely. So in 2022 and 2023, I wrote a good bit on Reddit, the r/day trading forum, and that's the link that I've kept in my X bio for the past few years. Totally free, just stuff I felt like writing about. And I don't write as much anymore, but that writing was actually a lot more helpful to myself than I originally set out for it to be. Um, I originally set out just because I knew networking was important. I wanted to start writing so I could kind of get my name out there a little bit, build up a bit of a following. Obviously, you do that by providing real value to a community. So, in the process of writing some of those articles, mistake tracking, like my visualization for studying, and even some trade reviews that I've put on Reddit, it really helped like narrow down exactly what I was thinking in my brain to being able to say, and that kind of reinforced exactly what I wanted in my own head. Um, but I don't write too much more on Reddit. I do post a lot of just like random threads on Twitter, a lot of like economic or trade style stuff, trade relations, that kind of stuff. I post some of that on my X, but I don't write too much anymore.
For the audience, I highly recommend going and looking at what Kyce has written, especially if you're a trader. I think it could be helpful for you. And I
Yeah,
also wanted
thanks.
to talk a little bit about risk management. Again, this is something that you've written about, but can you tell the audience a little bit about your general approach to risk management and how you manage to keep your losers proportionally smaller than your big winning trades?
Sure. So in 2022, my risk management was extremely rigid, and this is what I wrote about on Reddit was my exact approach, which I did have a very rigid approach for it. So being a long only discretionary scalper, I think I didn't mention that early, but I'm fully discretionary. Being long only, that's kind of implied, but um, what I would do for my risk management is I would always have a max loss. So the way I calculated that is I'd take my 20 or 30 most recent green days and I would divide that by however many days it was. So I'd get an average green day over my past 20 or 30 days, and then I would double that or triple it depending how I was feeling with the market sentiment. And then that was my max loss. So on any given day, I could only lose 2 or 3 average green days before I was done trading. And having that in place probably would have saved a lot of lives for some people. It really depends who you are. I trust my mental stops, a lot nowadays, but early on, I knew I hadn't earned my own trust to not do that. And in terms of drawdown, what I would do for my drawdowns is if I had a red day, I'd come into the next day half size. So it'd take me 2 days to recover that one red day. And I think for a lot of people who maybe can't remember or are going through this right now, early on when you have a drawdown, it can feel like the world is ending. And I mean that like literally. When I was first getting profitable, some of my first bad drawdowns, I was like, oh man, am I not going to be a trader anymore? It was just luck. Like, this is terrible. I got to get it back now. And it's so important to have a system in place for that of, hey, you took a loss, size down, take 2 days to get it back. You took another loss, stay at that size, take 3.5 days, 4 days to get it back. Okay, you took 3 losses in a row, cut your size down to a quarter, take a day off, that type of stuff. You got to figure out what works for you. But really having a max loss, which I mentioned, the average of my green days multiplied by 2 or 3, that's your first step. And then after that, you kind of got to curate your own style for drawdown. But, drawdowns happen. They happen to everybody. The key is to size down and take it slow. Because if you get rewarded for getting it back super quick, some people will be lucky and they'll be fine. But it's not a way to guarantee your success. And you can only do that by sizing down and taking the long road.
Thank you. I think that is incredible advice and something traders need to really take a look at. Do they
Yeah,
have
definitely.
a daily max loss in place? If not, start thinking about it. Listen to what Kyce is saying and really give yourself a number based on your profitable trades and what that average number might be for you.
Right, yeah.
One question I have, Kyce, is for your daily max loss at that time, were you using something in your platform to kind of cut yourself off, or were you telling your broker to cut you off at a certain area, at a certain number? Was it a combination of the two? What did that look like so that you can force yourself to adhere to what that max loss number was? How were you doing that?
So I can see what you're getting at there, and you're absolutely right. I did not have a broker max loss that I contact my broker and had them set. And I know a lot of people do that, and I think that's a great idea. If you're the type of person who gets emotional, which is totally fine, some people do, and like can't even control themselves, then that's something you need to put into place. For me, like just the fear and the shame of having a bad trading day was enough that like I wasn't gonna disobey my max loss, and I knew what that meant if I did that like to myself. I was jeopardizing my future potentially. Um, so mine was just trusting in myself, and every time I respected that trust in myself to continue to do the right things down the line actually grew. So I kind of liked not having the broker do it for me, but certainly if you're a person who needs that, you should put that into place. But I will say, if you're a person who consistently needs that, you probably need to address some underlying discipline issues, which is fine. But um, if you don't have the discipline to physically take your hand off the computer sometimes, you might need to relook into your system or strategy because that's probably not a long-term thing that's going to benefit you.
Great point. Accountability and looking inward to try to figure out why it is that someone might not be able to adhere to their daily max loss. Everybody's different,
Yeah,
but it is up to the individual trader to figure that out.
right.
One other question I had, Kyce, was about sizing up. Do you have any particular rules or philosophy about how you'll size up? For example, the sentiment that you have in a stock or something like that that you use to sort of determine whether you're going to go big size, medium size on a particular trade. How do you think about that, especially as you were increasing your account size? How did you get to a situation where you weren't throwing, so much at a single trade that you could lose a substantial amount of your account?
Right. Sizing up is a topic I have written about on my Reddit, and it's very individual. And for a long time, I was trying to think of like the best way to size up, process wise. Like, do you add a certain amount over time, or do you, you know, there's so many different methods that you see shared about sizing up. Um, Honestly, the conclusion I've come to after the past couple years is it's very individual, um, and it has to do a lot with like your mind and your subconscious of like what you're ready for. So in your mind, if you are in a tough financial situation, like you don't want to be thinking about trying to size up and like solve those problems. So you actually probably need to be maintaining like a smaller, more comfortable size. And then as time progresses, if you're trading consistently, you'll feel yourself naturally grow more comfortable um, with increasing your size. And honestly, for my career, that's kind of how sizing up has been with me. I've taken it in small steps, but I would hijack my own subconscious in positive ways to make it easier. And what I mean by that is nobody wants to start a month in a drawdown. So don't come into your month and size up on your first two or three trades. So I would come in and size, normally or size down. I get two or three green days, and then I've got my confidence rolling, and the next trade I can hit with more size. Same thing for your week. If you want to start on Monday or Tuesday with trading a little more cautiously, do that. For the year, I'm very aware of that when January rolls around. I just want to get a green month under my foot, get that start in the right direction. So sizing doesn't have to be this robotic, like, oh, my spreadsheet tells me to hit this trade on this amount, like, go hit it. No, you want to make yourself feel good emotionally, and honestly, that's truly what I do to size up. I'll size up more when I have a good month going or a good week going because I know I can risk some of those profits and still be trading at a high level. Um, and I'm aware of that every month. Even this month just started, and like I have two small basic green days to start September, and I'm okay with that because I know I'm starting on the right track. And a week and a half from now, I'm going to be ready to push it a little bit more.
That's excellent advice. Thank you so much.
Yeah, thanks.
And Kyce, if it's okay with you, I'd love to go through a lightning round set of questions. Pretty quick questions, pretty quick answers. Is that okay?
Yep, let's do it.
The first question is, what do you consider to be your greatest strength as a trader?
Patience.
Is there anything that you're actively working on this year to improve in your trading?
So outside of swing trades, long-term investing, I'm trying to build a foundation for that.
What's the best piece of trading advice you ever received or have heard?
It's typical, but it's start small. It's just the best advice there is. If you start small, your chances of success are so much higher.
What advice would you give to struggling traders who are considering quitting trading?
If you're seriously considering to quit trading, you probably should quit trading, and then you can come back. So if you need to take a month or 2 months or a few weeks, do it. I've done that a couple times in my career in 2021 and once in 2022 for a few days. And when I came back after that reset, I was in a much better place. So if you're really struggling and you've exhausted all options, quitting for a short time is not a bad idea.
Are there any misperceptions you believe exist about trading?
That it can't be a get-rich-quick thing. It's not a get-rich-quick scheme, but compared to a lot of things out there, you can get rich a lot quicker, and there's certainly examples of guys who've done it. So that allure isn't completely false.
For traders who are doing exceptionally well in 2024, particularly newer traders, is there any advice that you would give to them?
Don't get grass is greener syndrome. Whatever trading you're doing, even if it's smaller than what you see other guys doing, if it's your first bit of success, stick with it, stay the course. Even if you think you might not be able to size up as good or you think you know the limitations of your strategy, every day you're knocking in another gain. You're making a lot more progress than you realize. Early on with my strategy, I thought, the limitations of liquidity or what I was able to do were this and that, but I stuck with it, and I realized over time how much it can evolve just by, sticking with what you're good at.
Do you have any long-term goals related to your trading?
Not necessarily, other than to continue what I'm doing. In terms of like prop or going bigger, no, I'm going to stick with my own capital. So, no, I don't think so. Just stay the course.
Kyce, for those listening who would like to learn more about you, how you trade, or possibly even contact you, how can they do so?
Yeah, thank you. You can go to my Reddit. It's RLDKYCE. You can search up you/that. It'll pull up all my posts. You can sort it by top and look at like my top 10 or 15. Those are where I've written about mistake tracking, my mindset, risk management, trade reviews. The best way to reach me is on X, KyceFN, KYCEFN. Don't shoot me a DM. Drop a comment on a post that I make. It's the best way. If you want an answer, just drop a comment. I almost respond to every comment ever. My DMs get flooded with tons of bots, and I'm sure other people can relate to that. But X and Reddit, that's how you can reach me. And if you want to reach me fast, do it on X in the comments.
Kyce, thank you so much for sharing your trading journey with me and the audience. I really had a blast talking to you, and I look forward to when you hit that 7-figure milestone.
All right, thank you. Thanks for the interview. You did a great job. Appreciate it.
We hope you enjoyed this episode of The Trader's Journey. We have additional episodes we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming episodes the moment they're published. Thanks for tuning in.